Welcome back. In today's video, I'm going to discuss an alternative to mutual funds, and that's an ETF. And what exactly is an ETF? So ETF stands for an exchange traded fund. These are similar to mutual funds in that they hold a basket full of securities. Those securities could be stocks, they could be bonds, they could be a combination of stocks and bonds, whatever it happens to be. So let's say you thought maybe, I don't know, oil and gas was going to have a good year coming up, and you were interested in purchasing an oil and gas company, but you didn't know which one was going to outperform. So what you could do is you could purchase an oil and gas ETF. And so what this would be is a basket full of a whole bunch of different oil and gas companies all in one basket. So for example, let's use ZEO. This is BMO's equal weight oil and gas ETF. Equal weight just means that your money is going to be distributed equally to each of the different companies within that basket. It has nothing to do with market capitalization. I am in no way promoting this ETF. I'm just using it as an example of what an ETF could look like. So you can see here on this fact sheet what the ticker is, ZEO. You can see how much money is being invested into it. You can see what the current price of the ETF is. So you can currently purchase it at $58.99 per share. You can see it has an annual distribution yield of 5.23% currently, and a distribution is similar to a dividend for stocks. And you can see the management expense ratio there at 0.61%. And the risk rating is set for high for this one because it's all going to be gas companies, and there's a lot of volatility, a lot of ups and downs within this sector. You can see in this ETF there's currently 11 holdings, and just below that you can see which companies you're actually going to purchase. And you can see on the left the weightings, and they try to keep it basically balanced. Again, ETFs will commonly rebalance it quarterly or semi-annually to get it back in line with their asset allocation. And in this case it's equal weighting, so you can see those numbers on the left, maybe 2 or 4 times a year they're going to rebalance and get all those numbers to be the same. Oil and gas ETFs was just an example, but here's a list of BMO's ETFs. You can get ETFs that cover a wide variety of things. You can get ETFs for banks, for gold, for technology, for high dividend companies, real estate, healthcare, utilities, and you can see the list is quite long, and they actually said that there's now more ETFs trading on the TSX than there are individual stocks. And you can get some pretty specialized ETFs now. You can get some for clean energy. You can see here that they have a BMO Women in Leadership Fund, ticker WOMN, and that is an ETF that holds only companies that have 25% of their board members being women. So if there's any sort of cause that you're interested in, chances are there's an ETF that is there for you, and you can support those companies. At the top of the list you can see that there's ETFs that cover country indices. There's an ETF that covers the S&P 500. There's an index that covers the TSX Composite in Canada. There's NASDAQ ETFs and Dow Jones ETFs. And you can even buy asset allocation, an all-in-one ETF, a fund of funds. And I'll have plenty more videos covering those and their importance, and you can see how low some of their MERs here are. So how do ETFs differ from mutual funds? ETFs, like the name implies, they get traded on an exchange just like stocks do. That means that their prices do fluctuate throughout the day. Mutual funds are bought at an end of day price. If you were to purchase an ETF at 9 o'clock, it would be a different price than it would be at 1 o'clock or at 3 o'clock. Whereas a mutual fund, no matter what time you purchase it throughout the day, you will get that same price, and that's the end of day price. Like stocks, you can't purchase a fractional share of an ETF, so you can't purchase 10.5 shares of an ETF. Whereas with a mutual fund, if you have $1,000 to invest, you purchase $1,000 worth of that mutual fund, and you could end up with 10.513876 shares, some fractional shares, just all your $1,000 has been invested. That's not the case with ETFs. You might have some money left over because you can only buy a whole number of shares. Now, a brokerage company like Wealthsimple has started to allow you to purchase fractional shares of a few companies, mostly bigger US companies. They're starting to get into some Canadian companies. And so that sort of tells me that that whole landscape is going to change. I foresee in the future, I'm not basing it on anything, I foresee ETFs being able to be bought in fractional shares. If you watched my video on mutual funds, two of the big things that I didn't appreciate about mutual funds was, one, their high cost, their fees. Sometimes their fees ended up being in the 2.5% range for their MERs. Some of the highest MERs in the entire world are found here in Canada for mutual funds. You can purchase an index ETF here in Canada for about 0.05%. So that's about 50 times higher fees for purchasing a mutual fund. Those fees really add up. And the transparency was another thing that I didn't appreciate about mutual funds. Really, if you dig deeper into what you purchased with your mutual funds, you'll find the top 10 holdings and nothing more. You can't find any more information about what else you have purchased in your mutual fund. Whereas an ETF, some ETFs hold 13,000 different companies and shares and bonds, and you can download a spreadsheet and it'll show you every single company, every single bond that you have purchased within that ETF. So I hope this video has helped you understand what an ETF is and how they compare a little bit to mutual funds. I'll have plenty more videos discussing ETFs. If you want to continue being informed with some of my other videos, please subscribe below, and as always, have a wonderful day.